What if the key to the next financial revolution isn't hidden in traditional markets, but in a digital asset that divides the world?
Bitcoin is the winner. It's the orange dwarf. It has the network effect and is the most powerful global capital asset and global property asset.
Michael Saylor, a visionary who was once considered a quiet force in the tech industry, has found a way not only to tame risks, but to turn them into unimaginable opportunities.
But Bitcoin is already the winner. It has reached escape velocity. And if the US government starts acquiring it aggressively, not only will they benefit, but they will also force every other country on Earth to adopt Bitcoin as a global capital asset.
He speaks of a game where panic and euphoria are two sides of the same coin and where the rules are not written by banks, but by algorithms and a global community.
There are 4 different metaphors for Bitcoin. There's digital capital, there's digital property. The third important metaphor is that it's a digital energy network. And the AI economy is going to be built on digital energy by moving energy, money at the speed of light, at the speed of a computer. It's a $100 trillion economy. There is one digital energy network. If you own it, if you control it, you control and participate in that $100 trillion economy. If you don't, you're locked out of the economy. The AIs are going to think 1,000,000 times a second, and they're going to want to trade 1,000,000 times a second with each other. You can't do it without a digital monetary network.
Behind the scenes, it's about more than just price fluctuations. It's a power struggle between old monetary policy and an idea that's forcing companies to reinvent their playbooks. And how do you turn debt into billions in profits? Why might even tech giants like Google, Microsoft, and so on soon radically change their strategies? And what does a baseball game have to do with the future of our digital economy? And what does all this have to do with Michael Saylor? And now we're revealing how to challenge a system that has been stagnant for decades. And the answers could change your understanding of money, power, and innovation forever. Michael Saylor recently spoke in an interview about the volatility of Bitcoin, comparing it to fire, something that some people shy away from, but which can also offer enormous opportunities. And just like Henry Ford, according to Michael Saylor, who harnessed fire and engines to revolutionize an entire industry, Saylor emphasized that Bitcoin, as an asset traded around the clock, will continue to experience significant fluctuations. The price could, said Michael Saylor, rise to $180,000 per Bitcoin, then fall to $140,000, which could once again trigger panic among people.
There will be a drop or a significant drop that comes along. Have we moved past that because of the regulatory changes that have taken place?
I think it'll remain volatile because it's a 24/7, 365 global asset. You can panic sell it on Saturday night. You can enthusiastically buy it on Sunday morning. That's a feature. That's not a bug.
You've lived through some of the swings. But do you think we won't see the downturns like we've seen in the past just because of the changes we've seen?
I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140. And people will be freaking out about it again.
But this volatility is not a flaw. Rather, it's an inherent characteristic of the digital asset.
But let me make this one analogy. Volatility is like fire, and some people run away from the fire. But Henry Ford put the fire into a carriage via an engine, created an entire industry, and he gave humanity wings.
Before we continue, if you want to build financial freedom through Bitcoin and crypto, click the link in the description below the video and watch the video. Michael Saylor also explained in the interview that his corporate strategies include how his company has generated profits through clever financial operations. For example, he said he sold shares worth $1.5 billion, invested $500 million in Bitcoin, and later bought back $1.5 billion in Bitcoin, which, according to Michael Saylor, enabled a profit of almost $1 billion through arbitrage. And by using zero-interest debt instruments and purchasing Bitcoin, which appreciates in value faster than the liabilities, one can generate high returns in the long term.
Can we talk about? So I've been leading up to for me and for everybody to understand your tweet just from, I think, in the last hour. So what you did last week with the Treasury operations, you were able to generate a Bitcoin yield of 2.55%, or almost 10,000 Bitcoin for shareholders using an arbitrage. Can you explain it? Will I be able to understand this if you explain it?
We sold $1.5 billion worth of stock.
Okay.
Backed by $500 million worth of Bitcoin.
Okay.
We bought back $1.5 billion worth of Bitcoin. We captured nearly $1 billion in gains from the arbitrage. That's something we can do with equity on a day-to-day basis. When we do it with debt, we issue $3 billion of debt that's backed by $600 million worth of Bitcoin that matures in 5 years. We pay 0% interest. We buy $3 billion worth of Bitcoin. We capture the $2.4 billion in arbitrage gain up front. But then over the course of 5 years, we double or even quadruple the investment because we're buying an asset that's appreciating faster than the liability.
What you told me was it's a 55% premium over conversion, but a zero coupon. Is that the same?
That was a zero coupon at 55. And you can do that because Bitcoin is highly volatile, and the companies that have Bitcoin on their balance sheets are even more volatile.
And Michael Saylor also mentioned other companies like Mara, which pursue similar strategies by taking out low-interest loans to buy Bitcoin.
So Mara is a great example. 2 weeks ago, they did $1 billion convertible zero coupon to buy Bitcoin. This week, they're back in the market doing another $1 billion convertible zero coupon to buy Bitcoin. You can rinse and repeat that frequently.
And for large corporations like Microsoft, Michael Saylor outlined hypothetical scenarios. For example, if the company were to shift part of its liquid assets into Bitcoin, instead of paying out share buybacks or dividends, this could increase its market value by trillions of dollars.
Tell me, what do you think, or what did you tell Microsoft they should do, and what are the chances of that happening?
Microsoft is buying back its own stock, it's buying bonds, it's distributing cash flows. If they simply moved their existing cash into Bitcoin, it would probably add $1 trillion to the market cap and $150 to the share price. If they converted the dividend into Bitcoin, that would add another $150 to the share price and another $1 trillion to the market cap. If they replace the buybacks with Bitcoin, instead of giving up the capital, they invest the capital, that would add another $1 trillion and $150 to the share price. If they just use a little bit of leverage, basically take 10% leverage on a huge stock of Bitcoin, they add another $1 trillion. So what I'm saying is, instead of giving up the capital and then leveraging up the company, right now Microsoft trades at 20 times forward expectations. So or I'll say it this way, 95% of Microsoft's enterprise value is based on expectations. That's the best way to put it, right? And that means it's very asset poor, but rich in expectations. Why don't you actually buy assets and instead of being 95% based on expectations, be 50% based on expectations, de-risk the company, grow the enterprise value, and help feed the digital economy of the future? In his opinion, many companies focus too much on expectations instead of real assets. According to Michael Saylor, Bitcoin could play a stabilizing role here. And when asked what stage Bitcoin adoption is currently in, Michael Saylor responds metaphorically with a baseball game. Right now, we're in the second inning. Only when Bitcoin surpasses the $100,000 mark per Bitcoin, which we have now done, does the third inning begin.
So what inning do you think we're in?
Sorry?
Which inning? It feels like we're in the second inning of everything, or maybe not even that. Are we?
Yeah, I think we enter the third inning when we cross $100,000. Acceptance among large companies is still low, but more and more firms are adding Bitcoin to their balance sheets. Michael Saylor expressed his conviction that this will further drive demand and make Bitcoin a central component of the digital economy in the long term.
I don't have any illusions that mega corporations are going to immediately embrace Bitcoin. But what I do think is that it's going to become part of the conversation. And there are about 120 public companies that are starting to hold Bitcoin right now. There are a lot of Bitcoin standard companies like Mara, like Semler, like Metaplanet, like, Rumble is getting into the business. And as they start to buy Bitcoin and issue fixed income securities and equity securities, you're going to see demand increase.
And what's interesting, before Michael Saylor became so well known and started bringing Bitcoin closer to people, he learned how to spread his messages effectively. Michael Saylor also mentioned a period when he distanced himself from the investor community. The economic crises of the pandemic, especially government monetary policy, in other words, a war on currencies, as Michael Saylor puts it, ultimately led Michael Saylor to Bitcoin. And although he uses the term crypto, which is controversial within the Bitcoin community, Michael Saylor emphasized that efforts are being made to give this term a more positive and future-oriented meaning. So you heard what Michael Saylor said. The price of Bitcoin could soon rise to $180,000 per Bitcoin and then drop, which would trigger panic among individual investors. But this volatility is not a flaw. Rather, it is an inherent characteristic of the digital asset Bitcoin. But what does this mean for the future? It's no longer just about speculation. It's about a new playing field where the rules are being rewritten. Here, debt becomes a leveraged product, algorithms act as referees, and trust in institutions is replaced by Bitcoin, a decentralized asset. And while some are still debating the risks, visionaries like Michael Saylor are deliberately taking advantage of this and building financial freedom for themselves and others by using Bitcoin. Take action now as well, and make use of the time we still have.